Hey, what's going on, everybody? It's January 19th. Prices of BTC currently at 86.15. And what you're probably noticing something different about this video is that I am actually on video, on camera. And this is one of my big goals for 2020 is to make myself a little bit more personable by having my face on camera. Okay, I'm a bit more camera shy and I'm more of a private person. So I haven't done that in the past, but I really want to make it a goal of mine for the rest of 2020. Okay, so I hope you guys get used to my face. All right, so let's get to it. Prices of BTC 86.15. What we've done essentially is cascaded down with price action, basically slicing through all these stops that you're seeing residing under these wicks. Okay, everything that you see under these higher lows was for the taking for the bears. Okay. And what allowed this to happen a little bit easier is the fact that prices were overstretched to the upside with lower volume climbing, right, than they did climb over here, as you can see. Okay, so prices actually climbed higher over here. They climbed higher, let's see, over, where is it? Let me pull up the 1 hour. It might be a little bit easier to see. Okay, prices climbed higher over here with more volume, more consistent volume, and even over here with more consistent volume. Okay, so lesser volume, prices climbed even higher, right? So volume actually wasn't increasing on this move up, but it was consistently building. Okay, so one thing that we knew for the most part was prices would essentially go up into this deeper supply block right here, which was that blue block right here. Okay. But unfortunately, we didn't reach to our high target of about $9,300. But luckily, we got out in profit in our long position right here, around 91.65, and then closed the rest by our stop being hit at around 88.58. Okay, remember our entry was about 82.80, so a really fantastic trade, I would say. Again, the Cryptosomniac community really enjoyed going long in this period right here, while the rest of the world was trying to short the top at every inch of the move up, right? So like I've explained before, there's a time to be bearish and there's a time to be bullish, okay? And on this move up, it was time to be bullish and stop questioning when we're going to stop and when we're going to go down, okay? This candle right here was going to happen, okay? But it wasn't going to happen until we started meeting key areas of supply, which was up here. Okay, remember that the bigger players in the market like to get in and out of positions when there's a lot of people crowded in certain areas. Okay, they cannot just move the market up and down when there's no, a lot of crowd to sort of join in with them. Okay, so that generates more volume because more people are joining in and crowding the trade. And so in this particular case, right, when people started going excessively long and started to, utilize high leverage or use more capital, this is, a perfect area for the stronger bulls to essentially get out of the market. And then the bears have an easier way to suppress the market down because when a bear meets a bigger bull or just as big of a bull, it's hard for them to push the market down, right? Because on this way up, okay, if we watch the volume, okay, what was essentially happening was the bears actually tried many times in this consolidation and in this consolidation to press the market down. But everything that the bears were throwing the bulls' way was actually getting absorbed, okay, as you can see right there. Look at the volume going down all the way over here consistently, right? So what that told me was no matter what the bears tried to throw, the bulls' way, everything was getting absorbed and the bulls were ready to push higher and higher. And so the ultimate goal was to get into this area right here, right? Which they did. And they decided to sell some of their profit probably on the way up and then obviously near the top over here. And then they just kind of pulled the rug, okay? They did not have any buy orders to absorb the volume. And once the bigger players start getting out of the market up here, the bears can then easily push the market down. And this was also visible by the funding rate, which was excessively high up here. So what that does is, if you don't understand funding rate, all right, when the funding rate is excessively positive, right, that means the longs are actually paying the shorts to keep their positions open. So what happens is when you're long, high leverage, right, and the market is going up, okay, you think that, okay, I can just hold on to this position. But what happens is when the market starts turning down like this, okay, you are paying for a losing position and you're paying funding to keep your position open. And so what that does is it creates this kind of cascading effect, all right? So what you see is prices just get pushed down more. And once it starts hitting key areas like this stop right here of a lower high got taken, this one, and then those just topple down like a domino effect and take out these stops and these and these and these and all the way down here, okay? So all that gets pushed in like a domino effect and everybody starts capitulating, okay? And that's where you see this kind of big red candle. This is not because a whale just keeps selling and selling. This is just stops being hit on the way down and everyone is just running and trampling each other, okay, trying to get out of the market. And that just stops rolling over. And that's why we had our stop just right about this area right here, because if you start pushing the market down past this area, I realized you're definitely going to hit down here, okay? There's no reason if the market was supposed to keep going up from here, there was no reason for the market to pull back all the way down here, stop out these positions, and then go back up, okay? So this is something that, you know, if you don't understand why technicals work, the way market structure works, this is something that I explain in our community, and that's why we were able to get out of our long in heavy, heavy profits, okay? Again, just to pay the bills, we do have a 50% discount off our Advantage membership, all right? It's only valid for 1 month and the 3-month memberships, and it's only valid for people joining first time. So I hope you guys come join. It's only valid till January 30th. So come join and trade with us, and I hope to see you guys in our community. Let's keep moving. So that's, you know, like I explained, the cascading of the stops being hit. Now we're basically sitting at the key demand level, which was this 1 hour of consolidation. And notice, okay, I had this X right here. I stated that this was probably the least probable area right here to get hit if we do cascade down. But notice we also got hit right there. So basically, all the liquidity in all these X's as well as all these lower highs right here, or higher lows rather, they all got taken, okay? So what we now have to assume is this a reaccumulation process, and is someone big absorbing all this supply that's being pushed into the market, and are we going to go back up, or are we done, and is the big bull out of the market by selling up here, and is he going to rebuy lower, okay? That will only be known until we start seeing key areas being held, okay? Number one, what we need to see is this demand right here, right? This needs to hold. You do not want to see candles closing inside this demand, okay? If you do, you want to see a quick bounce right here and then a push back up. That's when you'll know that more than likely this area has held and we might keep going up further from here, okay? 4 hour time frame, still not looking the best, okay? You can see right here, it's a little bit more visible. Let me show you guys this. I'm gonna move my screen down, all right? So this was the ascending parallel channel that I was watching the entire time, okay? Watching this made me realize that for the most part, we should be looking for the targets to the upside all the way up into this yellow block. But the fact that we're now starting to break this ascending channel since the beginning of January right here, right? The fact that we're doing that, this is probably not a positive sign for price action, at least locally, okay? Now we could easily sort of keep going like this and, you know, push up right back into the parallel channel. But for now, this doesn't look good, okay? So I'm basically waiting out of all my positions, even my spot buy positions actually had their stops hit in profit, luckily. And now we're just waiting on the market to show us what it's got, okay? Are we going to go down further, or are we going to pick back up here? And notice how this is right at the bottom of the range. Oops, let me pull this a little bit closer. I don't know why it keeps doing that. Okay, all right, let me just delete that one, pull this. Okay, so if we stretch this out, all right, I want you guys to notice how we are just sitting at the bottom of the trading range that we've been in for this whole time. Yes, we were trying to break out of this trading range to the upside once we got over this EQ, this white dashed line. But once we got over it, we got quickly shoved back under and right at the bottom of the TR, right there, okay? So this is statistically the best bet to take as a long, where you are right now. But personally, I don't believe that you want to take this trade right now because you want the market to resolve itself and figure out what it's trying to do. Is it going to stop out more positions below? Because there are still, stops residing, under this area, this flag right here, okay? So who knows? We might go down around here, 83.85, maybe 83.50, and then push back up, okay? Let's see here. The weekly high, as we can see, 91.90. The daily open was over here, okay, in this area. Still not looking so good in terms of the daily candle, so you, again, probably want to wait it out. Let's see. Daily chart, not too bad. I mean, even if we pull back to the top of this flag movement right here, which is around $8,200, we should still be holding our uptrend intact. If we pull back over here, we could still push back up, okay? But for now, like I said, waiting is probably the best option, okay? If you want to short, and if you think this was the top, I guess you could short here with a stop above this wick. I mean, obviously, that's not the best risk to reward ratio because you're really shorting from here down to this consolidation period. I really don't know if it's going to get down to that area because if you notice the low of this wick actually hit the high of this wick right here, okay? So it could be very possible that all we had to do is come back around, retest the area of support, and then we just keep on moving up, okay? And also, the interesting thing is we did hit the golden pocket of this high to this low, okay? So the golden pocket, remember, is the 618 to 65% area, and we got rejected right there, and now we're pulling back down, testing that 50 fib right beneath us, okay? Let's see how the indicators are looking. MFI, money flow index right here. Again, if you're not familiar with the money flow index, it's essentially the RSI with volume. RSI is just price action being considered. The MFI is price action as well as volume. The MFI has started to turn down under the bands right here. So we might have a bit more bleeding maybe for the rest of the day, maybe another day, and let the market sort of figure itself out. That's what at least I would say. And then you can figure out if you want to go long or if you think we're going to go down further, okay? For now, I really do think that so far it looks like a healthy retracement. We're also retesting this descending trend line as support right there, okay? We might even come down lower here, all the way to about $7,800, $7,900, and that might be another retest. I personally don't think we're gonna go that low, but if we do, again, you know why we would. Let's see here. Volume was, again, pretty high on this candle, especially visible on the 4-hour time frame, I want to say. Okay. As you can see, 4-hour time frame, this candle pretty high, right? Compared to the last couple of sessions over the last maybe week and a half or so, maybe the last 10 days, right? So pretty high. Let's see here, let me see. This was also the ascending channel I was looking at. We broke up above it and then went down below it. So I would be really surprised, honestly, if we just keep going lower from here. I personally think that, we're probably going to just consolidate in this area and we might try to move back up into this parallel channel as well as this area up here. Because I think everyone and their mother is thinking that we have to go lower, all right? And the best way to sort of prove people wrong is by prices, consolidating, pressing maybe just $100, $200 lower, getting some people trapped to short the bottom and the support, and then we move back up into this area and then just slice through it, okay? That's personally what I'm thinking right now. But again, if we were to sort of keep going down, maybe take out, the 7,000 area, the 6,000, and go into 5,000, this is technically the ideal spot where you would still keep the downtrend intact because what you've essentially done is then from these highs right here, lower high, another lower high, then you post another lower high. And then this keeps sort of the bearish trend intact. I'm not really of the opinion of that right now because we've made some massive movements up. And also the fact that we really haven't broken structure of these higher lows just yet, okay? You know, start going below maybe $7,900, $7,800, and then we can talk about if this was the top. But until then, you know, people saying that this is the top for the market are essentially just, you know, speculating and, you know, throwing out darts, okay? Let's see here. CME. Yeah, I hope you guys don't mind the airplane above. CME, another positive point about the CME was the fact that, you know, it did close above 89.25. We had retested this 200 moving average right there. And then we're trying to move up and above, okay? I apologize for the noise. So let's see here. Nothing else on the CME. Again, one good thing about the CME that I really liked was the fact that we had this really impressive, you know, volume movement the past 5-7 days that we had. And I really don't think that the CME is going to push this kind of volume unless they have bigger, higher targets up in mind. Okay. Let's see here. All right. I think that pretty much wraps it up. Again, come join Cryptosomniac, folks. 50% discount off. As you can see, our trades right here, our long trades, really yielded us strong profits. And the gains reviews, as you guys can see over and over again when I post them and show people that this is really our community, okay? All these people that you see right now are the people who have been benefiting from our community over and over for me doing these videos for the past 2.5 years, okay? I'm a full-time trader, folks, and this is what I do for a living. So when I'm showing you guys the trades that I'm taking, my money is directly vested in it, okay? I'm not just showing you a trade setup that I myself would not be willing to take. So my money is always on the line when I tell you guys that I'm taking this trade, I'm going long here, short here, I'm buying this spot position or that, you know, there's my stop or there's my take profit, etc. Okay? So I hope you guys realize that, you know, this is not me trying to lead you guys down the wrong path. And also it's not investment advice, right? I'm just showing you guys exactly what I do to sort of, you know, put food on the table day in and day out, okay? So hope you guys enjoyed this analysis. I hope you take advantage of the 50% discount off. Shoot me a message once you come join, and I will see y'all soon. All right, take care. Cheers.